just wanna see the light. Yeah, I just wanna see the light. Yeah, I just wanna see the light.
Okay, just a quick sound check, everyone. Hopefully the connection is good, everything is good, audio is good. Okay, so welcome back, guys. This is going to be our last outlook in the market for the year 2022. It is a little bit quiet, but we are just going to get started with a quick general advice and risk warning disclaimer. Somehow working that well. Let me just check it a little bit, okay? See if it works. Okay. How about now? Is the audio any better? Alright, this how's echoing. Just give me a second, guys. Let me bump it up a little bit. Okay. Any good on its own? Sounds not clear. Alright. No, I'm probably using the I'm using my portable laptop right now, so the microphone is just coming out of the laptop. Okay. Yeah. Okay. That's what we can do on this one. Yeah. Let me do. Compressor. Okay. All right. So let's try it now. Super summary. All right. I think this is doable. You guys think this is doable? A little bit better. Okay. Is it good to hear me on this side? Some issues. Okay. What I'll do this. go slow. So I don't rush. There will be a lot of factors. Or another thing. All right. Hopefully the course goes away. Worse. No. Uh, really sorry, guys. Let me work on this for a bit. Yeah. Oh. Okay. How about now? Any better? Okay. So. Uh, okay. Good. But we'll make do. I do apologize, but we'll make do on this one for now. Let's just begin with a quick general advice and risk warning disclaimer. Note that any advice given is deemed to be of general nature, as the information or advice given does not take into account your particular objectives, financial situations, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. CFDs and Forex are leveraged products that carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are for example only. You are reminded that past performance is not indicative of future performance. Okay, so all right, let me go through the questions. I think we're waiting. Yes, do apologize. Okay, let's take a look at. I think there's a request on Euro Canadian and Euro AUD. So we're going through the requests here. It is a little bit quiet now at the end of the year, right? So we'll go through any requests that you have, and I do apologize for the poor audio. Extremely sorry on this one here, guys. But let's take a look at the Euro CAD first. I think Andy here has a position short both Euro Canadian at 1.4520 and Euro AUD. All right, let's take a look at the Euro Canadian first at 1.4520. And for a swing position, so we will take a look at it from a daily perspective. 1.4520. Okay. With the Euro Canadian, this one here, it's going to be a little bit tough for a swing trade. Overall trend remains to the upside for the Euro Canadian, at least on the daily time frame. We do have support building up, maybe around 1.4150 to about 1.42, right? But that's pretty much how far that swing is likely going to take you. In terms of stop losses, I think you should be moving your stop losses to about 1.44. No, about 1.44. Yeah, about 1.4450, just to follow the tank content at least on the daily time frame. If you want to hold this for a swing short, I'm not expecting a huge price movement to the downside for the Euro Canadian. So this one here, it's going to be a little bit tough because the overall, I think we're still looking at the sideways movement on the Euro USD. That's likely going to impact a lot of the Euro pairs here. Okay, so that's for the Euro Canadian. And this That's my point of view on the Euro Canadian. I think it's okay for you to trade short on this one, but just make sure that you know your limits, because if we go by retracement levels, at least on the Euro Canadian, this one has just broken below 23.6%. In terms of how far it can go, I'm not really anticipating a move towards 61.8% at this point in time. In terms of the volume in the market, uh, just not seeing that right now. Momentum has dipped down a lot, but we're not really looking at a lot of changes in terms of price movement to the downside. All right, so we got potential support building out around 38.2 and 50% on this one here. So maybe if you're going to be targeting 1.4275, I think that's okay. 1.42, 1.4150. That's probably about how far the Euro Canadian would go, right? On the Euro AUD, this one here is probably a little bit more interesting. We have that rejection from the daily on 161.8%. So, in terms of how far it's gone up, I think we are good to clear off this FIP. We don't need that. We do have a new FIP right now, and price is broken through below 1.57. So I think this one here, it's a little bit more encouraging, right? A little bit of a temporary support at around 1.5650. So for that Euro AUD, it's a short at 1.5790. All right, that's okay. I think that's a good price. So there's a possible exit at 1.5 in Euro Canadian, 1.38. Euro Canadian raised that up a little bit. I'm potentially not looking at 1.38 at this point in time. For the Euro AUD, in terms of 1.5, 1.5, it's really, really far. 1.5, it's beyond whatever it is right now. I'm probably looking at around 1.5550, 1.55. That's pretty much it. Just right around 78.6% on this one here. In terms of the momentum, I think we should have enough momentum on this one. In terms of stop loss, very quiet trading. I think you should be moving your stop loss to about 1.58 at the very least for the Euro AUD. Right? So you short at 1.5790. You can start moving your stop loss to about 1.58 or maybe to about break even, and then you can let it run. Okay, but you need to adjust it because year end, first week of January, it's going to be quiet. We need to be a little bit more careful. So yeah, congratulations on 1 million subscriber. We have a quiz tonight, right? And I'm going to ask that later. So hang on tight. We are going to do a quiz tonight. And I think the price is, that's not, I think, I know. It's $50 onto your trading account, onto your real trading account. For the first two person that answers the quiz, right? Okay, good. Good. Okay, so sound seems to be good right now, yeah? I'm catching up on the chat right now. Okay, at least you guys can hear me. I'll do better for tomorrow's session and Friday's session. I'll fix this before Friday's session happens. Okay? All right, next one, it's going to be New Zealand Swiss. So we're looking at a lot of exotics here because the majors are not really moving a lot. New Zealand CHF, right. Next up is New Zealand Swiss. I think New Zealand Swiss, this one here, it's actually a little bit more interesting. We are about to come off the oversold condition, at least from the momentum. We are still above the Ichimoku cloud. Okay, so I think this is looking good. Just need price to move up higher a little bit, right? There is a little bit of a resistance in terms of daily time frame, right around here, which is very, very close to about 1.5. Let's just put it up at 1.59. Sorry, 0.59. Okay, so 0.59 is going to be the barrier for New Zealand Swiss. If the daily time frame can transition above the 0.59, then I think it's going to be a good buy. In terms of how far it can go up, I think we are going to be looking at a little bit more of an extension above the 60 cents, at least on the New Zealand Swiss, right? We should be good to take this into consideration that we are actually looking at a hidden bullish divergence on the daily time frame. Even if the daily closes above 58.56, I think it is a good buy. But just to be safer, any close above 59 cents, that's going to be a lot better. We are definitely looking at a hidden bullish divergence here. Market is trending to the upside, so we have a higher low, right? So we've got a higher low, and we are looking at the stochastics creating a lower low. So this could be a good opportunity, but I want to see a break above 59 cents. If there's a break above 59 cents, then I'm really, really leaning towards, we're looking at a 127.2% extension here towards 61 cents exactly, right? So we've got price breaking above 59 cents. I would take the swing. Just make sure your stop losses are pretty much above 58. In terms of target level, that really depends. You can go for 60 cents, or you can go for that 127.2% at 61, right? But if you want to be a little bit more conservative, then you can go for 60 cents. Your risk to reward ratio is roughly going to be about 1 to 1. Okay. Okay. We'll take a look at gold, and then we'll take a look at the AUD. So we're really going through by request here. I do have a couple of good trades to look at. I think one intraday wise, if you guys are looking at pound USD, I think that's a good shorting opportunity on the pound USD. But we'll take a look at gold right now. Okay. So in terms of gold, this one here has been a little bit more limited in terms of potential price movement, right? I think this was mentioned on the outlook. The concern that I have here is that we actually have more of a rising wedge on gold on the daily. So if it continues to fail at 1825 and any transition daily below 1795, that could actually trigger a potential reversal on gold, right? Momentum remains to the downside. If we take a look at how price is moving right now, right, we might say we're losing momentum, but price continues to go up. This is where I'm actually a little bit more concerned. We haven't gone beyond 1825, number one. Number two, if we were to look at this, we are actually looking at a potential rising wedge on gold, right? So I need you guys to be a little bit more careful on gold here. I don't want to be super bullish on gold. I'm really more cautious if there's actually a daily close below 1800, daily close below 1795. It could trigger a potential correction to the downside. Obviously, if that happens, then we are going to be looking at previous resistances, which is around 1725 as a potential correction level. And that's going to be normal because that pullback towards 1725, it's going to be back towards the issue. Okay, so this could be a potential ongoing thing for gold. This is going to be a concern. If it continues to fail at 1825 and we have a daily close below 1800, 1795, then you need to be a little bit more cautious. I don't really trust how the momentum it's going right now, just because we have low volumes in the market, really towards years, and I don't really see a lot of movement or strong gains on equity. So we really anticipating any more central rally at this point in time? No, I don't think we have any rallies this year. Yep, study chart very well. It is ranging, very much ranging, right? So, Yeah, I actually want to talk about the China reopening. It is actually a huge concern for a lot of the markets out there. Okay, so we've got New Zealand Swiss, that's done. We've got gold done. Dollar yen range is small. Is it okay if we open a position? Because it seems like they haven't done a proper retracement or a correction. Yes. So let's take a look at the dollar yen, and then I'll talk a little bit more about the whole China situation right now. Right. So here's the dollar yen. Uh, do I have a little bit of a concern on this one? Actually, do we look? Are we looking at a normal flag patterns on the dollar yen? On the daily, it's not right. So thing in terms of correction level, you need to be a little bit more concerned because it's actually failing at the Tenkan Sen. So technically, we still have 135 as a potential barrier for the dollar Japanese yen. If you're looking for a position intraday wise on the dollar Japanese yen, this is our position. This, if you take a look at this one here, this is unique, right? I think this is a great learning experience. Take a look at how the cloud has transitioned. It was very very thick, all right. But if you take a look at how it's moving right now, the cloud is actually not that thick. Uh, it's pretty, the range is actually pretty stable, right? So if we take a look at this one here, and if you are thinking of opening a position onto dollar yen, do so on the basis that we're not done in terms of the correction. I don't think we should consider this drop here as a normal move in the market, right? So that was the Bank of Japan widening the band from the 25 cap yield to 50 basis point cap on the yield on their JGB bonds, right? So take a look at the correction. It's about 50%. Take a look at how far the momentum has gone down. This correction is not done. I think we could see this picked up a little bit towards 135. Okay, so if you're thinking of opening a short position on the dollar yen, it's a little bit too early. We could potentially see this go back up to a test 135. If it fails at 135, then that's where you want to go short. But until uh, if you take a look at the hourly time frame on the dollar Japanese yen, it's not a great short. Okay, don't go short dollar Japanese yen. At least not today. As long as it's still above 133.50, you don't want to go short on the dollar Japanese yen. So at least on the hourly time frame, you definitely sorry, not 133.50, it's 133. Yeah, it's actually 133. So as long as it's still above 133, you don't want to go short on the dollar Japanese yen. My concern on this one here, we might see a little bit of a bounce off 133.25, and that could trigger a potential run towards 135. So this is still a possibility on the dollar Japanese yen, which, on hindsight, I was actually looking at a pound USD. Okay, because if we take a look at the pound USD, we are at a little bit of an issue here with the pound USD. So the US market is already open, right? We started the session late today. So we have a little bit of a resistance right now at 1.2112. So if we hike that up a little bit, the limit is going to be about 1.2125. Now if we take a look at this and compare it onto the daily time frame, that resistance at 1.2125, it's still going to be a resistance right around the 1.1 level. Okay, so 127.2, that suggests potential move towards 1.2150. All right, so I really want to look at this area over here between 1.2125 to about 1.2150. Any failure at that level, so I'm going to let this run. I don't want to go short on this one just yet. I'm going to let this run today. And if it fails, that's where I want to go short at around 1.2140, 1.2150, because if we move back a little bit, right, take a look at where market has been capping it. It's pretty much right around at that level. So right around at 1.2150. If it fails at 1.2150, then I'm planning for a short on the pound USD. This one here, in terms of risk reward ratio, I think this is going to be okay. Even if you have your stop loss at 1.22, you could be potentially targeting a move back towards 1.2050 at the very least. Risk reward ratio is going to be great. In terms of risk, once it has transitioned back below 1.21, right? You can move your stop loss to break even or at whatever swing high it is. So you can move your stop loss to about 1.2150. At that point in time, the risk reward ratio is going to be crazy because you might only be risking less than 20 pips for a potential gain of 100. So I like pound USD, and this is one that I've actually been waiting for basically throughout the whole week. Because if we take a look at the pound USD on the daily time frame, right? We know this is currently struggling to find support at 1.2, 1.2050. We take a look at it on the daily time frame. It has gained today, but take a look at the Tenkan Sen. The Tenkan Sen has actually transitioned below the Kijun Sen. Take a look at the stochastics here. We are still below 20. So could we break 1.2? If we fail at 1.2150, then yes, we could potentially see another run, another retest towards 1.2. It's not trending. It's still in a range because we're really looking at a range market here. But I think it's a great opportunity, at least in this, very, very quiet market. All right. Let's talk about Sterling ZAR. Wow, someone traded that. Okay. I'll add that in and I'll take a look at it, at least on the intraday scale. Right? I'll just begin. Time. Oh, this is an exotic, so at least on an intraday scale, not really too concerned. This one has transitioned above the Asian cloud. In terms of potential correction, I do need to step up a little bit onto the 4-hourly time frame because we are still going by this fib here all the way from 20th of December. This is the current fib, right? To have a little bit of a resistance at around 50% at around 2080, right? How far can it go? Think we could go and push higher towards 61.8 first, and then potentially towards 78.6 around 21. So that's on the 4-hourly time frame, right? But if we transition this onto the hourly time frame, you can actually look at this one here. I don't trade this, right? In fact, I think this is the first time I've looked at this. This is South African rand, yeah. I think this is the first time I've actually looked at it in many years, right? But if you're asking for my opinion, just basing on technical, on what I would take a look at this one for, and if you're planning to go long on this one, you can go long. Just make sure your stop losses are slightly below 2060. Right? In terms of target level, you can go for that 78.6 around 21. Risk reward ratio probably going to be about 1 to 1. Again, this is not going to be for everyone, so keep that in mind. This is a very special case. Oh, currently sounds so much better. Okay, aku tonton sambil ngopi. Siap. All right. So let's talk about China. Right? Let's talk a little bit on China. My concern on China is super simple, right? My only concern on China right now is actually on oil. So I think a lot of people are going to be focusing on this one here. I would look at oil at this point in time. So this is the current plan for oil, and it's unchanged. My view hasn't changed. If there's a daily close above 82 on oil, I will trigger my long position on oil. But until that happens, not going to happen. So the China reopening condition, it's actually very, very unique at this point in time. If you note, if we follow with the cases, it's a lot, right? I think the expected death by January is going to be 1 million. I think there was actually about 1 million cases of infection in the past week or so in China. Last month, they were locking people down. Just this week, they are announcing that they are actually opening up their borders. So this is a concern. I don't know what's the plan on this one here, but the infection keeps rising, and if they open their borders, I think that's going to spread more infection onto the world. So countries like Malaysia, I believe Malaysia has already come up with a statement. I'm not sure about Singapore, but if anyone can fill me on this one, I know for sure Malaysia and Japan requires anyone that comes from China with a negative result, a COVID test result, and only from China on arrival, right? And that's pretty much it. So I think people are having issues with it. China is saying like, this is it's all it's all not true. The infection rate is under control. I don't think so. And the infection rate is really, really high, and especially with the cold weathers right now over there, this is a concern. So this concern has spilled over onto the commodity market, especially oil. In terms of oil demand, right now we are actually projecting that if cases rise, then oil demand is actually going to fall. So we have an inverse correlation with the rising COVID cases in China. With the reopening, that's going to create a lot more problems as well, right? So yeah, reopening or not reopening doesn't matter at this point in time. Right now, what matters is the cases in China are really, really high. Okay, and if that COVID cases goes up, then oil demand is expected to go down, because I think, from a commodity trading perspective, we expect the demand to fall off because production is going to slow down because of the infection. Okay, so with oil, I would say don't rush oil. Okay, we are currently capped at $80 on oil per barrel. That is on the WTI, and this is going to be the benchmark, right? So we have bumped up about $10 from 70 to about 80 right now. We have a little bit of a temporary resistance at 80. The next resistance is going to come in at around 82. If we have a break above 82, then that's where I would consider going long on oil, right? If you are going to be speculating, if there's going to be a rejection at 80, can we trade oil in the short term? This is what it looks like on the hourly time frame. So we are currently transitioning back below the Ishimoku cloud. So if you're thinking, yeah, you know what, we could, take that news that we expect COVID cases to go up, we expect oil to go down. If you're thinking of going short oil on this one, right, at the current price level, then you have a couple of options. But I think what I see is that you definitely need to have your stop loss at around 81 in terms of potential target. You would probably only go as far as about 77. So it is going to be about 1-to-1 risk reward ratio. It's not huge, right? The range is not huge. We're looking at around maybe $2 up and down, but we are somewhere in between. Okay, if you're thinking this could be a good short trade, right? If you don't want to have your stop loss at 81, if we have a consistent close back below the Ishimoku cloud, or the stochastics process backed out, then you can have your stop loss a little bit lower, maybe around 80, if you want to minimize your risk on oil. So this one, we have a little bit of an expectation, right? With COVID cases, it's not going to shrink immediately. It's not going to go down immediately. So in terms of oil demands, in terms of production slowdown coming out from China, is that going to impact oil? I think it's going to impact oil in the short term. But just do keep in mind how far it's going to be. we're looking at this from an hourly perspective. This could go to that 77 level or breaks above 81 within a 1 week period, let's say by Friday, or even the first week of January. So just keep that in mind. Okay, so oil, I don't like it for long-term positions as of yet. If you're thinking of a short-term position on oil, I'd much prefer to have a short position because we do anticipate COVID cases in China to still go up, demand for oil to go down because production is likely going to slow down. Okay. Sterling yen, sure. Okay, let's take a look at sterling yen first. This at least from the daily perspective. Okay. So, sterling yen is a little bit unique. This one here, we might see that recovery happen, right? But this is going to be in line with what we saw on the dollar yen. A little bit dangerous to trade swing on the sterling yen. Okay, just because we have a very thick Ichimoku cloud, we have transitioned below the Ichimoku cloud. We are moving back in. So I'm not really expecting a move higher at this point in time. I do expect a little bit of a retracement to happen, right? So in terms of that retracement, I think we are probably going to be looking at around 50%, which is around 164. That's going to be a limit on the sterling yen list on the daily. If we take a look at what that 50% correction is on the hourly time frame, this is what we get. It's still a huge distance to the upside, but if you take a look at the momentum here, again, I don't expect a run towards 164 immediately at this point in time. I would actually see more of a potential run towards very close was 38.2, maybe around 162.75. Price might just sideways a little bit and might gradually grind up to the upside. But if the dollar yen fails and completed that rejection that we talked about earlier, the sterling yen would follow suit as well. Okay, so the movement on the sterling yen and the dollar yen, at least on the hourly time frame, are very similar. We are just different in terms of the momentum on the sterling yen. All right. Audio is it's really cracking up. Yeah. Okay. Would it actually help if I switch off my camera? Okay. So we did talk about pound. I like pound for a potential short on pound. Here we go. Okay. So for pound USD, I do expect a little bit of a. There we go. This is for the pound USD, right? Let this one run up. Let this one run up. And any failures at 1.2150, I would take that as a cue to go in for a short on USD. So sound does improve when I shut off my camera. So maybe it's the bandwidth that I'm having issues here. That's around 300 USD. I'll recover it, deposit again. Recovery. All right, so we did talk about sterling yen. Waiting for XCI break above Ichimoku Cup for today on the early time frame. Okay, so yeah, look, with oil at this point in time, not really expecting anything positive coming up from oil. So be very careful. I much prefer if you guys go in for a short on this one here. This issue is going to persist. This is not something that's going to disappear tomorrow. Okay, so there's this question on recovery here. I think we actually did. Have we gone through trauma recovery on our webinars on Friday? I don't think so, right? I think it's going to be scheduled for January in terms of equity growth and for recovery. All right, let me go through the questions first. GBP and AUD are bullish from the last 2 days. Okay, so let me bring you into perspective on the AUD USD first. Okay. Sorry, guys. I got this mixed up. Okay, so here's AUD USD. If you think this is a bullish market, you need to look hard on this one here. We're not really moving a lot, right? It is a range bound market condition. All the majors are within a range bound market condition. Australian dollar, although we do see that recovery right now, we're not really exceeding anything, right? Because in terms of resistances, we got 68 cents, we got 69 cents. So let's bring it up on this one here. This is the current range on the Australian dollar USD. I'll be frank, I think the Australian dollar has performed better, but it's not by a huge margin on anything else. We're not really moving away from that 67 cents. We're still pivoting around that 67 cents. In terms of resistance, we're still being capped at around 68 cents. So we're still within reasonable range for the Australian dollar USD, right? For the pound USD, if we take a look at the pound USD, nothing much is going on here. Market has been pretty much flat, trying to bounce away from 1.2, 1.2050. Okay, but we're not looking at a lot of success on this one. And if the pound USD fails on the hourly around 1.2150, that's where my Q is on for the pound USD. Yeah, we can categorize Euro USD as a range bound market condition. Yes. This is ridiculous in terms of range. We're still pretty much boxed up on this one here. I would probably focus more on 1.07 and 1.06 right now. If it does break 1.06, then that's where it would trigger for a potential move towards 1.05. But until that happens, we're still basically trapped within this range. And this is basically what it looks like. It might look huge to you. It's not. In terms of range, it's really, really small, right? For Euro USD, around 60 pips range, that's pretty much it. So if you're thinking, right, this is range bound, right? Can we go to 1.07? If you're thinking of going long 1.0, wherever it is right now, your stop loss would need to be at least 1.0625. If you're targeting 1.07, it's not a worthy risk-reward ratio. I would really much prefer if we transition below 1.06 or at least below the Ichimoku cloud below 1.0625. I much prefer that short position on the Euro USD because in terms of potential target range, we can go for that 1.05. Much better probability, much better risk to reward ratio. But yes. Let's say I have a position from 71 XTI, right? You're talking about XTI, yeah, Sulianto? If you have a long position from 71 and you want to hold it, by all means, hold it. Because right now, in terms of potential pullback on this one here, we're only looking at a pullback towards 77. If that happens, right? But even if you're holding it from 71, I don't think it's a huge deal. Really much more on whether you want to manage your position right now, you want to take that profit right now, buy back in around 77, or let it run, and then you can scale in at 77 and maintain that 71 lead that you have, then I think it's okay. Yeah, okay. What is gold doing for the last 2 days? All right, so let me bring you into gold as well. This is my concern with gold. We haven't really progressed anywhere for a while now, right? We've been stuck at the 161.8 level at around 1825 since the 13th of December. We attempted to break that again, but still fails at 1825. So, as per outlook, as long as we don't progress above 1825, then we're not really going anywhere on gold. With central banks, FOMC still hiking rates, right? And I don't think their terminal rate. Look, this is really funny because I read a lot on what people are thinking around the terminal rate from the FOMC, and I think they're not. A lot of people are actually thinking about 40% of people are actually thinking that that's it for the FOMC. I don't think that's it. It's just too close to where it is right now, 4.5 to 5%. Two more hikes, 25 basis points, you're going to reach that. I don't think that's a reliable scale for 2023 in terms of terminal rate from the FOMC. Right, that's my view. From a technical standpoint, if we don't break 1825 and price transition back below 1795, it will confirm a rising wedge on gold. Okay. Overall, it's still going to be above the Ishimoku club, but we might see a little bit of a deeper pullback, 1750, 1740, 1725. That's a possibility on gold. So if you're waiting for gold, right, you want to wait for that one trade on gold. Don't rush in right now. We don't have volume in the market to drive this anywhere, at least not until we get past the first week of January. If you're a scalper on gold, then trade within 1825 and 1800. But if you really want to wait for that one big swing positions, then I would prefer a daily close below 1795, and then I will trigger a short there. Or if it does break above 1825, we don't know at this point in time where it's going to go. In terms of probability, I think we are looking at a very strong resistance at 1825 at this point in time, just from gold. So gold is not trending anywhere. It looks like it's trending up, right? So you might actually be fooled into thinking that price is actually moving up, but we're actually looking at a slowdown in momentum. If we take a look at this one here, we're actually looking at a potential regular A divergence. This is going to be notable on the RSI, not the stochastics, but you can still see it, right? So basically starting from November, we actually see momentum go slower. In terms of the highs on the momentum is actually lower, price grinds higher, and this is a concern. If we are looking at a potential regular A bearish divergence, which is a reversal, and then we have a rising wedge on gold, and we have a key level at 1795, 1800. We lose that key level, key support at 1795, 1800. That's going to trigger a very, very deep correction in the market. So be very careful on gold. Do not rush gold. No problem, Ashok. Just be mindful on gold, because I know a lot of traders a lot of traders are not looking at it from a bigger perspective. Are just gonna think, okay, yeah, price is still grinding up. There's a lot of support in the market. People are buying in. I'm not seeing the momentum behind that right now with gold. So I'm very concerned with how gold is doing right now. If it's unable to break 1825 within what this is pretty much end of this year, yeah. So within the next 1.5 weeks, if it's unable to break 1825, then we are looking at that probability of a much deeper correction for gold. All right. Someone requested dollar Swiss. Mistake request there. So dollar Swiss should it be a buy? No, I don't think this should be a buy. The daily for dollar Swiss, we're holding on below 127.2%. We might actually see a potential return towards 91 cent. This one from a daily perspective. Let me check on the hourly time frame. Yeah, look, I'm definitely not going to be looking for a buy on dollar Swiss. I will just let this run. Either you have a short position running and you are happy with it, but don't counter whatever the dollar Swiss is doing right now. I don't like this at all, because if you want to go in for a short right now, thinking that yeah you could go in for that run to the downside, your stop loss is going to be there. This is going to transition into a swing trade. We've got a little bit of support coming in around 92.25, right? And then 92 before 91. But I don't think this is great, because at least from an intraday perspective, we're looking at a risk reward ratio that's really, really bad. 25 gain, risking 55 pips, not worth it. Don't. And don't go long on the dollar Swiss as well until it's able to maintain a position above this. Sorry, as long as it's able to maintain a position above 92.25 and we see a noticeable bounce, then yeah. But if you do that, it's going to be a counter trend trade, because if we take a look at the hourly time frame, it's really a strong push to the downside. You can counter it if you want to. Just be mindful where you want to get out. Okay, and I'm not gonna draw up and say, hey, I'll just place an order at 92.30. Just call it a day and buy on dollar Swiss. Just do H4. Same thing on 4-hourly time frame. Definitely not looking for a buy on the dollar Swiss. Not really too keen on this one here. Too dangerous for a buy if you're buying just on the assumption that there's going to be a support at 92.30. You can, but just keep that in mind that you're actually going to be countering whatever the market is doing. It's actually 92.25, I'll be honest with you. And if we take a look at this as 92.25, then we actually need to look at it as, support at 92, even on the 4-hourly time frame. So just keep an eye out 92.30, 92.25. If you want to buy it when price bounces off 92.25, 92.30. So you need to wait until it gets there. And if you do buy on this one, just make sure your stop losses are not too big. Don't place your stop losses more than 92, right? That's pretty much it in terms of potential target. I wouldn't go too crazy on this one here. I would probably go lower around 92.75 as a potential target. It might look huge, right, on the 4-hourly time frame, but take a look at the pips here. It's only 44 pips gain. You're risking 34 pips. I would look somewhere else for other things. Okay. Clear now. Good. Could I check the Euro USD on the daily time frame? Yep, sure. What are you planning on the Euro USD on the daily time frame? It's really not going to go anywhere. If we go by the daily time frame, either we transition below 1.06 or we break 1.07, right? A couple of things on the Euro USD here. The reason why I'm actually staying, I'm not really bringing the Euro USD up is if there's a break above 1.07 and we are able to maintain this trend line, which is at around 40 degree, 45 degree, this is going to form an ascending triangle, okay, at 1.07. There is going to be a potential swing position if it does break 1.07, and you can have your stop loss at this swing just slightly below 1.06. Just a potential target level. You can go a little bit higher, probably not 1.09 and stuff like that. About 1.0850 would be a great target. It's going to be about 1-to-1 risk ratio. But we are gradually going to increase this. We could gradually increase this to 1.09, right? Okay. But yeah, I see what you're trying to look at on this one, Albert. I'm actually looking at the same thing as well. So there's a potential for this one to form into an ascending triangle. As long as it's able to maintain that degree, that means the Euro USD would need to gradually move closer to 1.07. It should not make the sudden move. It should come very close to 1.07, and then the timing, in terms of timing, we need to get past the first week of January. That's where we are actually going to see more volume into the market. That's where we could potentially see that breakout really play out on the Euro USD. Euro USD is range bound. It's not really overbought or anything like that. The stochastic, it's pretty much neutral. It's at around 60. The RSI is also pretty much neutral. Okay, take a look at the pound New Zealand. Okay, let's take a look at the pound New Zealand. I'm looking for 1.9220 for a buy. My thoughts on this. On what time frame? Actually, what time frame? For all time frame as well? Just assuming it's going to be on a 40 time frame, yeah. Hey Chucks, on New Zealand looking for 1.92. No voice. Hello. Okay. All right, so there's a little bit of a delay here. I'm just looking at the chat. I hear my own voice. I think there's a couple of seconds delay. Okay. On New Zealand looking for a buy at 1.9220 on the 40 time frame. 1.9220. Let's draw 1.9220. Look, I do. I feel really bad, guys, on this one here. Right, 1.9220 on the 40 time frame. This one, let me just double check on the daily time frame. Yeah, yeah. Don't go long at this on not on the daily time frame, because we might actually be okay. So on the daily, we've got 1.9 as a potential support level, and this should translate to the 4-hourly time frame as well as potential support level. This is the current range. If you're thinking of going long 1.9220, then why not 1.9225? That would place this above the Ishimoku cloud, and I think that would be okay if it does break above 1.9225, right? Okay, so there's voice. So I do apologize on the poor sound quality. This is really I'm not happy about it. You guys shouldn't be happy about it. It's completely my fault on this one here because I left my desktop microphone. But yeah, I'll fix it. I'll get a headset and I'll fix it for Friday, so don't worry. Right? By the way, end of the hour, let's do the quiz. Okay. Are you guys ready for the quiz? Yes, Kashif. Agreed on this one. Great. I like it too. I like 1.9225. Okay, let's do the quiz right now before everyone gets fed up. So whoever is left here, let's do the quiz. Right? This is to celebrate OctaFX 1 million subscriber. Congratulations to OctaFX. Ready? Let's go. Who comes up first, okay? So I'm going to read the question very, very slowly. And the question is, what is one of the most watched economic data that is released every Friday of the month? What is one of the most watched economic data released every Friday of the month? Okay. So easy, right? All right, we got winners. This is a super, super easy quiz. But at least you guys know your stuff, right? You guys know your calendar. You guys know what NFP is. You guys know when it's released, which is great. So fast, right? Everyone is just entering so fast. I'm super happy with this response. You guys know your stuff. Okay, great. So do we have a winner? I'm not picking the winners. After FX team is going to pick that winner. So 2 winners are going to get $50 each onto their trading account. You guys are awesome. That's congratulations to Emmanuel Wa and BHCM. Congratulations, guys. We've got one more quiz tomorrow, but tomorrow is for the Indonesian session, yeah? But yeah, other than that, we have I think the Friday session is actually going to be the end of the first series of webinars that we've actually done for the past 3 months, right? Can you guys believe it? We've done 3 months of the Friday sessions. You guys are up to webinar number 16 or 15, I believe, this week. So we talked a little about trading strategies last week. This week, I'm going to outline what you guys need to actually build your own trading strategy. And I'm going to give you some examples as well. So for the person that was asking, how do I actually start recovering? This would be your first step, right? Build your own trading strategies. Don't rely on signals. Don't rely on others, right? Whatever outlook I gave you, whatever opinion I gave you, you should compare it to your own trading strategies and whether or not it actually fits your trading style, right? Because like Kashif is asking me on the 4-hourly time frame. Not everyone trades on the 4-hourly time frame. So Kashif has a different strategy compared to a lot of you guys here. We're going to do more, Kashif, so don't worry. Congratulations, winners. There's going to be more chances ahead. Pretty sure. I don't know what's going to happen. I'm not the one that organizes this, right? But I'm pretty sure OctaFX is going to continue to break more milestones, and there's going to be a lot more quizzes, so don't worry. I think there's one more coming up, right? Am I correct? I think there's a giveaway tomorrow, I believe. Okay, so just a reminder, on Friday, we have a building your own trading strategy webinar. So I'm going to list what you actually need, and you're not going to be building one. You need to build at least 2 trading strategies, right, to be used in your own trading. Yep, Kashif, no problem at all. Everyone has their own preferred time frames. All right, so there's another quiz tomorrow. So there's a giveaway chance again tomorrow. Congratulations again. And I do apologize for the poor audio quality, and I'll definitely try and fix this. No, I will fix this. I won't try. I will fix this for Friday. So don't worry, guys. Okay. Thanks for putting up with me tonight. And for those that might have started their holidays and probably wouldn't be able to join us on Friday, I would wish you a very happy new year. All right. Have a safe holiday. We are going to take a break for the first week of January. We'll come back on the second week of January. If I don't see you on Friday, then have a very happy new year. Stay safe. Be healthy. And I look forward to seeing you guys again next year. But we still have a session on Friday. So for those that can come in on Friday, jump in. If you are not able to come in on Friday, then a very happy new year to you guys. All right. Have a great evening. Stay safe, guys.